Hello, my name is Evan, and welcome to Evanomics 101, your number one source for everything economics. Yesterday, global markets went on somewhat of a roller coaster after a major development in the US Iran conflict. And what happened next really kind of tells you everything you need to know about the how the economy really works. In today's video, we're going to break down three critical things: what actually happened yesterday between US and Iran, how the stock market, oil, and global economy reacted, and what this means for inflation, your money, and what comes next. Um, I, the setup is a little bit different today. I'm not in the classroom. We're actually on spring break. So I'm trying out some different equipment. I got a microphone. I'm hoping that it helps. But uh, before we dive into the video, just a quick favor: if you want more real world breakdowns that actually make economic sense, um, or economics make sense, please like, share, and subscribe. Share this with somebody who follows the markets or follows finance or economics, and please subscribe so you don't miss out on what's coming next. Um, we're going to go ahead and jump into the video. So basically, here's the situation. You know, there's been conflict between the U.S. and Iran for weeks now, and it looks like we finally agreed to a temporary 2 week ceasefire, but it's really fragile. Um, one of the key issues here is the Strait of Hormuz. This is where about 20% of the global oil supply flows through. It had been partially blocked during this conflict. That disruption sent oil prices soaring above. I think I saw it above 113 at one time per barrel. Um, Now with the ceasefire, oil routes are now reopening partially. Okay, let's just wait to see how that happens, see how that goes. Uh, Tensions are still high, and the ceasefire could break at any moment. But markets aren't reacting to peace; they have been reacting to a pause in the chaos. All right. So what actually happened with the markets yesterday? Now this is where things get really interesting. The moment the ceasefire was announced, the Dow Jones jumped over 1,300 points. S&P, it went up 2.5%. The Nasdaq was over 3%. At the exact same time, oil prices crashed 3 to 15% in one single day. So, question is, why? Um, because you got being flipped, or because markets flipped from the worst case scenario, maybe things are okay, right? Uh, this is what this is what a lot of people call risk on behavior. Investors move into stocks, sell off of safe assets, bet they're basically betting on growth again. All right, but you got to catch with that. So here's the catch. Um, when you relate oil, inflation, and why all of that matter, oil is everything in our economy. Um, when oil prices when oil prices were rising, or as they continue to rise, because I don't believe oil prices, just because we have a 20% decline in oil prices in one day, that don't mean that's going to prevent them from continuing to going up in the future, in my opinion. So when oil prices are rising, inflation fears are increasing. Transportation costs are surging. Businesses are faced with higher expenses. Now, with oil dropping, inflation pressures could temporarily ease. Airline, tech, and consumer stocks um, rally hard. Energy companies actually lag. But here's the twist: even after the drop, oil is still way higher than before the conflict. You still almost at $100 a barrel. And as I'm looked at the markets today, I think it was a little bit over $100 a barrel. The Strait of Hormuz is still unstable. Shipping traffic is far below normal levels. So inflation risk, it's not gone. It's just delayed. Um, so quick pause. If you're going to value, if you're getting value from this video and other videos, and you want more breakdowns that actually give you an edge on some things, um, hit the like button. Please share this with somebody who watches the markets, or uh, is into geopolitics or anything like that. Most people don't get the opportunity to learn this, but once you do, you start seeing opportunities everywhere. Please hit the like button, share, and subscribe. Let's get back into the video. Um, so even though stocks went up, You had stocks going up 1,300. I think the Dow was up 1,300 points. Markets are extremely cautious, and basically, here's why: the ceasefire is only 2 weeks. What happens after the 2 weeks? Iran is still making threats about shipping routes. Um, Oil supply could get disrupted again instantly. Global tension um, is still active. We're in what's called a headline driven market. This is um, what we see is driven by what's being announced from day to day. One headline, market up. Next headline, market down. Well, you don't even have to make a headline. Just let the market do what it does. If oil prices are going up, the market should be coming down. But we're not seeing that for the last couple of weeks. This is not stability. What we're seeing. This is extreme volatility. So let's bring it back to real life and what this situation means for pretty much everyday life. All right. Um, this situation is it impacts gas prices. Um, they could drop in the short run, but still uh, are vulnerable to spikes. This affects inflation. It might cool briefly, but geopolitical risks keep pressure alive. Interest rates. The Fed is watching this closely. All right. War equals inflation risk. It just does. Ceasefire equals a little time to breathe. Um, what's it looking like for your investments? Stocks may rally short term, but volatility is here to stay. You're going to continue to see huge jumps, spikes in the market on a day to day. It's just, you know, I mean, we've been seeing it for years now. Markets are not pricing correctly. They're pricing hope, and hope reverse. It can reverse really quickly. All right. So what happens next? Let's give some scenarios on what's gonna what's gonna happen or what I think possibly could happen. Okay, you got so the ceasefire is in effect for 2 weeks now. What if the ceasefire is able to hold? That's one scenario. You got from that you'll get some stabilization in oil. You got the stock market that will continue to go up, and possibly inflation might cool off a little bit if the ceasefire holds. If the ceasefire holds, all right. Second scenario, conflict returns, which I think probably is going to happen. We're going to have oil spike again. Stocks are going to drop. Inflation is going to surge. Um, long term scenario. Uh, this provides the biggest upside in the markets. You know, you got the least volatility and the most economic stabilization. Right now, markets are betting on, in my opinion, markets are betting on scenario one. But again, I think we get scenario two. So this is one of the moments where economics, politics, markets all coming together. And if you understand it, you already ahead of most people. Okay. If you found this video valuable, please hit the like button, subscribe it, drop a comment. Um, do you think we're gonna get it? Spike in inflation from what we're seeing going on with the conflict and the war. I wanna hear what you're seeing in your part of the world. Okay, and please stay tuned. Got a lot more videos that will be coming. Thank you again for uh, stopping by to watch this video. Please like, share, and subscribe, and I will see you on the next video.